Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts.
In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market, then we will move to the order flow, and by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is entering and testing a quite strong level of previous monthly supply and resistance, which again was acting here as supply and resistance, which the market has now just started testing. But in a situation like this, we could expect a deeper test of this zone, meaning that we could expect a bit more bullish price action to go right into the area, as the market has already done in the past. So bullish price action could be expected before then getting a rejection to the downside from a monthly perspective. Going down on the weekly, what do we have? Now, here on the weekly, price action has been quite clear. We had a market which clearly was creating a series of higher highs and higher lows. Starting from here, we had the first impulse, correction, higher high, higher low, another higher high, now another higher low, and now another higher high. Now, this is precisely an ideal uptrend. In fact, in an ideal uptrend, what you would expect is the market to create a series of higher highs and higher lows, in which every time when the market creates the correction, it goes and tests exactly the previous high, which at that point is acting as previous resistance turned support every single time. Now, if you do remember, in fact, I did speak about gold when the market was here and explained all the reasons for which we could expect this rejection to the upside. And by the way, I will link in description that previous analysis so you can go and check it out for more free education. Now, when the market was testing this area, you have to keep in mind that we had an impulse and correction. And in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how we had a market which was testing exactly the 0.786 of the Fibonacci taken on this weekly impulse, which is a quite strong level of support, which in this case, as it was lining up precisely with the previous resistance turn support, was also creating confluence of support at this area, which we did in fact expect this market to reject to the upside. So here on the weekly, everything looks very bullish. Dropping down on the daily, what do we have? Now, from a daily perspective, price action is quite clear. We have a market which is currently printing a very strong impulse to the upside. In general, after an impulse, what you would expect is a potential correction before then getting more bullish continuation. So in a situation like this, as the market is creating this impulse to the upside, if we want to measure a potential correction, what we have to do is take our Fibonacci from the low to the high of the impulse. And if we do that, we can see that at the moment, we would have the 0.32 Fibonacci retracement, which is currently lining up with this previous daily resistance, which is now turned support. In fact, from here, all this previous move to the downside was created, and as this level was previous resistance here, now that the market has broken it to the upside, is turned support at this level. So what we could expect in a situation like this is for this market to potentially go and retest this previous resistance turn support, and from here we would have a good probability of seeing a potential rejection to the upside for a deeper test of the monthly resistance that we have identified at the beginning of the video. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data precisely for gold, what we can see is that with the last reports, net positions have already started getting decreased. We went from having the high of 160k net positions all the way down to now having 98k net positions. However, it is also important to keep in mind that even though in the short term net positions are getting decreased, as we have just seen, in the long term essentially they have doubled. We went from 52k net positions with 155k shorts and 207k longs from an institutional perspective, all the way up to now having 98k net positions, so essentially doubled, with 215k longs compared to 117k shorts. So in the long term, gold has been getting bullish. In the short term, it is getting bearish. What this shows is that what we could potentially get is a deeper test of that monthly resistance, because still gold is strong. Then a rejection to the downside is definitely a possibility, as the market has already done multiple times in the past. Here, and now, we could expect a little bit of a deeper test before then getting a potential rejection to the downside as net positions are getting decreased. So this could very well be the last correction and continuation before then we get a deeper reversal to the downside, rejecting that monthly resistance. However, if we do get a correction to the support, there is at least a good probability that we will see a potential continuation higher. So if we do get a test of this area, how we could be approaching a potential move to the upside. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the market to complete this impulse correction and impulse pattern to the upside. Now, if you want to learn more, you don't know what I'm speaking about when I say valid entries and this kind of things, I really suggest that you go and check out transparentfxtrading.com. Here, you have the possibility to gain access completely for free to the entire mentorship program, in which you have all the courses with all the rules of the strategies, and you also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we used precisely in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down, directly from this page, you will see that you have the possibility to get completely free access to the mentorship program and register your account. So I really suggest that you go and check it out at transparentfxtrading.com, and I will see you in it.
If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.